payments for employees, and like operating segments, like if your revenue or profits or assets are more than 10% of your overall company, then you need to report that segment. And revenue from customer contracts, basically a milestone based, performance based revenue recognition. Financial instruments in terms of the some bonds which are convertible, how they are reported differently. Lease accounting, whether it's a finance lease or an operating lease, how the assets can be part of the balance sheet or off the balance sheets. And of course the standard ones which have been there for a long time, like how to evaluate your inventories and complying with income taxes, deferred income taxes, property, plant and equipment. This is the meaning of PPE for accountants. Of course today the meaning of PPE is totally changed. But coming back here, related party disclosures, all the joint ventures, subsidiaries, common directors, all that has to be reported. Intangible assets like goodwill, that need to be reported. All the contingencies, how they have been covering the risk, and also related party disclosures. So a combination of all of these chapters provides a framework for reporting, financial reporting, and it's called IFRS. One example of IFRS is like, for example, IFRS 15, which dives into the revenue from customer contracts. It requires customer contracts to clearly spell out what are the performance obligations and have a separate purchase order for each milestone. And then once the performance is done, the price for each milestone is defined, and then the revenue can be recognized only for that part. So these are the kind of details where we are talking on a very high level, but in fact the SMEs go to the very, very great details, and they many times I have seen consultants which will say, I focus only on IFRS 15 and IFRS 9, which is like say financial instruments is looked after by another colleague of mine, like that. So because they really are more like a SMEs focused on that area. And how SAP is as a package can help in complying with IFRS is broadly that many of components of SAP, especially the latest version SAP S4 HANA, it can support these requirements. For example, IFRS 15 is supported by a module called RAR, which is revenue accounting and reporting. So which basically where the revenue can be linked to the milestones, and each can be treated differently in terms of revenue recognition. And these are very important things, because revenue recognition for various industries are very different. For example, subscription based revenue is not recognized when we collect the annual revenue in advance, but it is recognized as and when the obligations for the subscription are required. Airlines, we may collect the ticketing travel costs right up front, but revenue cannot be recognized unless the actual travel is performed by the customer. So those kind of high level complexities are supported by SAP's submodules within finance. So I'll dive into the SAP details now, and we can then see how these projects for IFRS compliances are well supported by SAP solutions. So just a little detail on the SAP. As we all know, it's an integrated financial accounting package. The heart of that is the chart of accounts for the companies, each legal entity, and then it can maintain the master data for its for banks, customers, vendors, assets, and then the subledgers are maintained for each of these areas, and all the operations of the company are integrated by the way of processes, updating the GL or subledgers directly from the process. So this collections, incoming or outgoing, they're all updating the chart of account. Based on the chart of account, they're updating the ledgers directly. Um, so general ledgers are configured in this central part of the core part of the financial accounting in SAP. Uh, there are two parts to the general ledgers, which is like based on the chart of accounts, which will tell which part of the balance sheet or profit and loss they will belong to. And then for each company, related to each company, there could be a different way of working. So how to show that, something, some details of whether it can post negative, posting, those kind of details can be configured for each company, while the chart of account level can be configured for all the companies which use this chart of account. So integration of all the modules like HR, finance, uh, the integration of finance with all the modules like HR, SD, etc. is taken for granted here, and that helps in terms of automating the processes. But one of the key, innovation SAP has come out with in S4 HANA is that it's a something called universal journal. So what is universal journal is basically it's a combination of all the uh, ledgers which were maintained by SAP in previous versions, in terms of assets, in terms of material, in terms of management accounting called controlling, and of course the core is the general ledger accounting. So now in the universal ledger we have something like 258 fields. All of them, all the fields are populated for each posting, and these include, the entries for assets, materials, movement, controlling, management accounting, allocation of expenses from one cost center to another, or the core GL postings. So this innovation has been possible because of SAP using an innovative in-memory database called HANA, and the HANA makes it easier to not only post the universal ledger in a real time for all the parts of the accounting, but also provides data for the uh, not just the transaction analytics, but also the uh, analytical data is available, because this is a single version of truth, because all the accounting entries have been posted in real time in universal ledger. So this kind of a innovation has removed some reconciliation requirements between various ledgers at the closing. So it makes it easy for being able to comply with international reporting standards. And I'll just come to some other features which use the universal ledger to make the life easier for the finance managers. One of the common thing is that which was already there in application packages like SAP, called parallel accounting, but now it has been enhanced and it's called new GL. So new GL will have a common GL accounts, and then it will have parallel GL accounts for reporting, whether it's in the local gap or in the IFRS, and these accounts are posted automatically based on the configuration done for the entry level GLs. So whatever entries are made in the GL accounts, they based on the transaction type, based on the configuration done, they can post whether the local gap or the IFRS or even parallelly US gap in parallel. So those are the kind of advantages of the new GL. So we are maintaining basically a, ledger groups. So we create ledger groups. One ledger group can be for the local gap, one could be for IFRS, and the entries to the postings to the financials can be automated to post them in parallel. So there's no need of separate entry for each of these compliances to standards. Some more details of this, for example, when the assets are purchased, assets would be in various classes, various types of assets requiring different depreciations. They will be maintained centrally, but they can be posted in parallel for various accounting principles. So these areas, parallel accounting areas are maintained Each area will have its own accounting principle. For IFRS, it can be in parallel to the local GAAP or parallel to the US GAAP. Each one of this area can have its own depreciation keys in terms of the method of depreciation, for example, multi-level, straight line, and can have its own depreciation rates based on the asset class. And the key thing is that all the GL accounts which need to be posted are already pre-configured. So while posting, we just need to make an entry level posting or run a depreciation in one go, and it will in parallel post all the accounting principles which are needed to be reported in parallel. And which is basically means it's posting the ledger groups in parallel, and each one will have a different treatment based on the depreciation area, depreciation terms, depreciation period, and of course the class of the asset. So these kind of tools are helping in terms of the quicker and automated compliances with the new accounting standards like IFRS. Some more functionality in the SAP S4 HANA Finance is like document splitting. So the document entry can have a one single entry, while the posting splits the document automatically for various ledger updates or various segments. So this can be configured very easily, so that finance team is only making the single entries, but the posting is happening in parallel. And for those postings, we need to have a offsetting, because every ledger entry is a double entry, and there we need to maintain the zero balance in the ledger. So the second entry, the double entry, is done automatically as an offset entry by the system, and all this can be configured based on the document type, the kind of transactions we are doing, etc. This is another view of the document splitting, where we actually can do it separately, separate rules for each company. And also based on the document types, as you know, each document type based on its plus the processing key can make a difference in terms of how the transaction is posted. And the GL accounts which are split are posted into different accounting principles, or different characteristics like profit centers or cost centers, based on the configuration which is done here. So this is again a very good feature, where the automated accounting entries can be done from a single entry view, but the posting views are different. And just not the entry, they can also generate different documents for each of the parallel entries based on the legal requirement. For example, something which is going to the IFRS ledger can generate a separate document which is maintained for the IFRS compliance in terms of audits and all that. So these are the very powerful systems where document types with their own number range we can maintain for each of the compliance areas. Last one, where we basically feel that the projects which involve the IFRS compliance are quite complex, and these have the split up of the processes of the entire company, and then which one is affected or which one needs changes. All that is defined by the SMEs who are experts on the IFRS. What SAP team does is takes those requirements, understands them, and configures them in the SAP modules. And another thing is that testing them out. Many times the testing of the unit configurations are done by the SAP team itself. After all the full end-to-end processes are configured, they are handed over back to the IFRS experts for the user acceptance. So this is the kind of project activities can be planned based on this high level processes which need to be changed, and high level configurations which need to be changed and tested in SAP. Last but not the least is like all of this parallel accounting to comply with the accounting principles like IFRS provides an online analytics. The idea is that there is no lag time in making the postings and availability of analytics of the data to the finance